Day 3 p.m., just our time to share knowledge with you. And today I bring to you a concept called tax advantaged retirement plan. So of course you know what is retirement. Of course you heard that buzzword all the time. But how does that relate to you, especially if you are a small business owner and you know that you got so many money to spend, right? From cost of goods sold all the way to payroll, from payroll to office supplies. And by the time you end at the end of the year, you felt like you didn't have anything you made. How am I going to do retirement plan? So of course, that's always a continuous, a process you have to put in for yourself in order for you to get the amount of money you can have when you retire. You know, it's very, life goes, right? Time goes. It's regardless you're happy, not happy, you save or not save, it doesn't matter. So you will arrive the time where you go, ooh, I just didn't really save enough. So to prevent you falling into that crowd, which there are people like that, right now they're in the age of 70 and 60, they realize that, oh, I should have kept some stock. I should have not cashed out my 401k. So there's a lot of, oh, what if I didn't? So I will have a better life kind of scenario, right? So let's just talk about, as a small business owners, what can you do today? Today is April 16. We just finished the tax filing season. 2023 seemed already behind us. And I know you're like, too late, Ying. I can't do anything for my 2023. Even though I have so much money I made, but I can't put anything into my, retirement plan. I am too late. You're not late. That's why I'm here today. So I will start sharing screen with you so we can get to our PowerPoint and also the resources that we offer to you. And you are looking at my website. And right here, I always show folks that you can come to the appointment button and come to make appointment with Ying. And remember, my book is also called Appointment with Ying at 8 a.m. and 10 a.m. I'm writing the 2 p.m. and the 6 p.m. But when I write the 6 p.m. book, I don't want myself to sit in the place where, oh my goodness, I don't even have money to buy a piece of paper to write my books because I didn't save for retirement. Don't ever put yourself in that position. So what we want you to know is that you want to prepare. Here are the partners at our firm. Every one of us equipped with knowledge, and you can always tap into us, do a video conference with us, resolve your problems, right? And here is our YouTube channel. Our channel accumulates all the talk we have here, just like today. If you missed today, no big deal. You type into this magnifying glasses right here, folks, and you can type into retirement, then you will go into all the webinars that we ever talked about related to retirement. And I did prepare myself for today's conversation. So here you go. This is our PowerPoint. I know once I bring the PowerPoint up, and a lot of folks are was saying to me that you got your PowerPoint, but your content sometimes it didn't line up with the PowerPoint. That is the whole point. The PowerPoint is always there. So you can always go back to look what I wrote there. But at the same time, I want you to hear me, because sometimes what you heard will enhance what you read. So that is really the purpose of we want to talk. I want you to be able to drive while listening to me. So get that knowledge to be second nature of yours. You don't need to be expert, right? You don't need to know how to set up those retirement accounts. You don't need to know where Ying got all these knowledge and what is she talking about. All you need to know is that you heard the buzzword. You heard due date, you heard retirement, you heard tax saving, and you heard retirement plans. So all of these things will give you the knowledge when you talk to your tax preparer, when you talk to your financial planner, then those will come out to help you. So knowledge doesn't mean you have to be a professor, right? Knowledge can be just points here and there, here and there. This is why sometimes when you go to doctors, you tell your doctor, oh, I just checked on the internet. I think I have this problem. The doctor just don't want to hear that because you don't have that knowledge as a whole. you have pieces. But in our world, I just need you to have pieces. You don't need to have all of it. Once you have the pieces, you can guide the people who are working with you to the right direction. And this is on our PowerPoint. This is our firm information. You know all about us. And we are a 27 years old company, and with more than 10,000 clients we serve. Collectively, our folks, we speak 10 different languages. And of course, we have 5 branches by now. We just established Houston branch this year. And I myself, I am the CEO of Community CPA, also managing partner, and I have served on the federal advisory committee called National Taxpayer Advocacy Panel for 3 years, providing advices to IRS. And this is my book. You can find them on internet. And the information on our webinars are really information for your reference. And don't rely on it for your legal battle somewhere. And you want to study it. If you really want us to help you with the battle you are fighting right now on the finance side, on the accounting side, tax planning side, and you can engage us to serve you. But the internet is really a place for treasure hunting, but you may not get any treasure. So it just depends whether what you hunt is really going to serve you, right? All right. So don't have a tax-favored retirement plan as of now. Small business owners, a lot of you don't even think about retirement. You think your life gonna last forever. You think you're too tired, and by the time you think about retirement, you already fall asleep. So all kind of reasons, just don't have one. But what we're trying to say to you is, that's okay. You don't have one today, but there's so many to choose from, and you should choose one. You should start thinking about one. The current retirement plan rules allow for significant tax deduction for businesses. Let's say you own a coffee shop and you run your businesses in the coffee shop and you work there 24/7. And so you decided that, okay, I work here, I like to have a retirement plan. That's where your first step is. You see your own needs. Once you got yourself into it, then you can spread that benefit to your employees. A lot of times, this is what I see. When the business owner are taking care of themselves, take care of themselves really well, then they can have energy to take care of their people. A lot of times you hear business owners say, oh no, I'm just going to take care of my people first. I don't need anything. Of course, that could be 3 months spirit that you have. But if you really go on that path forever, you don't last. There's no business owner in business is 100% for the employee, nothing for themselves. That doesn't exist. But however, if you take care of yourself, get yourself a good retirement plan, and you enjoy it, and you will know how to bring them on to the plan with you and have them enjoy the same benefit that you would have. So these are examples, right? SEP IRA plan, simple IRA, and solo 401k, defined benefit plan, pension plan. These are the common ones. The one I just eardrop for you so you hear it and you know there's a lot of those. These plans in general allow you as a business owner, you can deduct the money you put into the plan. So that's in general. Just let's say you got a plan and you can put in $20,000 and you can put in this $20,000 into your plan, which you did not buy grocery with it, because it is in that plan. So your $20,000 can reduce your profit. If your profit is $20,000, after you put away $20,000, you don't pay any taxes. You have no tax liability. Makes sense, right? Tax deferred growth. Of course, other than you can deduct it so you can reduce your tax liability, you also grow the money inside of this account. From $20,000, grow that to be $40,000. And while you are putting that away, you also don't pay payroll taxes, right? On this contribution you put away. And the tax, of course, tax gonna come in when you withdraw. But look at this. When you withdraw after age 59.5, that is taxed as ordinary income. And the withdrawal, of course, withdraw prior to that age, it is considered early draw. So you have this 10% IRS penalty. But let's say if you draw it early, but that year your income tax rate is 0, and you got 10% IRS penalty, still so much better than you paying 37% of taxes, right? So you see how the retirement plan do have benefit. So just close your eyes, you already know. It helps you save your taxes on your business. Also, it is growth in the account. Also, you don't pay taxes, you don't pay payroll taxes, and as well, when you withdraw, if you choose the time to withdraw, you can save tax again. So that is the general benefit for having a retirement. So tax credit for employers. So this is the part that I would not go deep, but I'll give you an example. Right now, we are April 16, right? We just finished the tax season. We are doing 2023 tax. Am I right? Yes. So now, your 2023 retirement contribution, you are not done. As a company, and you can contribute to your retirement before the extension due date. So say if you have an S corporation, so your extended due date is what? September 15, okay? So you have from today, April 16 to September 15, this much time to come up with the money to contribute to your retirement account, and you can still deduct that for your 2023. So when you file 2023 company tax return, there is a line item on the tax return to ask you how much of benefit did you contribute in 2023 but not yet paid. You put that number right there. And you can reduce your profit in 2023 tax return even though you haven't even paid it yet. Makes sense? Doesn't make sense, but that's what it is. So I want you to remember that because it is not end yet. You can still put in money right now from your business account to your retirement account or pension account and reduce that amount out of your 2023 tax return. This is what we call Setting Every Community Up for Retirement Enhancement Act. It is called Secure Act. So I want to give you that concept so you don't need to read the whole thing, but understand what we're talking about. The act itself also gives a lot of incentives for small business to get engaged with retirement account. For example, it says that small business can receive tax credit to offset the cost of starting 401k plan. Just understand that sentence. Tax credit. What is tax credit? Tax credit reverses your tax dollars, am I right? To tax credit in this case equals to the cost of your plan setup. So the plan setup may be a $500. The cost of the $500 can become your tax credit. Isn't that a big deal? Because the tax is, how is tax come about? Tax is revenue, is your net profit times the tax rate. Let's say our tax rate is 20%. Your revenue is 1,000. Let's say 10,000. So 20% of 10,000, you get what? You got a $2,000 tax credit. Am I right? So what if so you are actually got 2,000 tax credit, then 2,000 tax dollars. Then let's say the cost of setting up 401k plan, the cost is $2,000. Then you turn this cost into a tax credit. That is 5 times of what your benefit you are getting because you are using cost to offset your taxes. not revenue. If you have $2,000 cost, your offset revenue, you're only saving the cost times the rate of the taxes, right? But right now, no. This Secure Act is saying whatever cost you have, you turn that into tax credit. Of course, there's a limitation, but I want you to understand that is the effort the government is making, trying to make small business to have an incentive to set up more retirement for the people who work for you, for yourself if you are the only employee in the company. All right, so example of contribution deadlines. So I want to give you an example of these deadlines because this is really key. This is probably the reason why I'm here today to talk to you, because I don't want you to call it done. It is not done. 2023 tax is still in your hand. You can still contribute, okay? So the deadline for 2023 tax year to set up SEP IRA plan for a sole proprietorship business that use the calendar year, so like December 31st, for tax purposes is October 15, 2024. Did you see that? If you extended your return. So this is today. We're talking about real time right now. So if you have this kind of plan, you're setting up this plan, you have October 15, 2024 to contribute. The deadline for making contribution for 2023 is also October 2024. For 2024 tax year, the deadline for setting up a SEP and making a contribution is October 15, 2025, if you extended your 2024 return. Okay? So to make simple IRA contribution for 2023 tax year, you must have set up the plan before. So the reason they say that is the plan is existed, and you can contribute so in such a relaxed manner because it is not done until October 15, 2024. You can still shuffle your money. If you come to community CPA, did your taxes, we dropped it, we go, oh, you're going to pay a lot of taxes because your profit is too high. And you have a SEP IRA you can contribute to. There you go. So you can go, I will contribute to that. And we filed extension, so we can deduct that for you on your tax return. That is the beauty of considering retirement plan. All right, so one more slide related to the number. So I just want you to look at the slides knowing what is the number. So right now, as 2024, the maximum contribution is lesser of 25% of the employee's compensation or $69,000. Look at that. 25% of your compensation, if you are using Schedule C, let's say you are doing your taxes on Schedule C, sole proprietorship, then you take your profit times 25. That's how much you can put away. And what you need to do, you just need to make sure you put that money away before October 15 of 2024, but put that number on your tax return. It didn't happen yet, but you can already deduct it. Isn't that something? This is something that our small business owner just did not get it, because a lot of times our thinking is like, oh, I haven't even paid for it yet. Can I really deduct it? Yes, you can. That famous saying, right? Yes, you can. All right. Now, 401k for sole owners. 401k is a good plan. A plan that offers a lot more deferrals and a plus contribution, plus the matching contribution from your business can make up a really big number for you. For example, $69,000 as a threshold, right? So this one, 401k, when you are a sole owner, there's no employees in your company. You just set up 401k solo 401k. So that way you have the plan. If you have an employee, and you can set up profit sharing 401k plan. So there's different kind of 401k plan would work for you. So you want to see which one works the best. But the idea of 401k is the same as what we talk about the SEP IRA, because the matching piece of the 401k doesn't need to come in right now. Ladies and gentlemen, it can come in at the filing due date. So what is your business? If it is S corporation, that means September 15. If it is a C corporation, that means it's October 15. If it is sole proprietorship under your Schedule C, then that is October 15 as well. Makes sense, right? So in here, I also talked about 2024. So in 2024, if you are over 50 years old, your total is $76,500. Just imagine. You can put away $76,500 in 1 year. How much tax does that save you? A lot. If your tax rate is 20%, and we're talking almost $20,000 saving. So that is the power of deferring your income to future world. One of my clients came over and said that, Ying, I don't want to put in retirement because the tax rate gonna go up. When I draw the retirement funds out, I'm going to be taxed so badly. It's not worth it. So I am not doing retirement. You are so wrong. Let me correct your thinking. Many states do not even charge taxes on retirement funds anymore. If it is money coming from pension, the state don't charge any tax. So the government in general, the United States of America in general, the tax is becoming more lenient, the rules becoming more towards to the favor of the baby boomers, the older citizens. Because they are what? They are a lot of people. A lot of policy makers are baby boomers. Don't forget, you are in your 20s, you don't make policy. But those people who are 60, 70, 80, they are the one making policy. And you think they're going to make a policy to charge themselves a lot of taxes so they can be happy? No. We are humans. They are too. They're going to make policy they understood. They're going to make policy that's beneficial to them, to that group of generation. So with that said, in the next 10 years, mark my word, the tax will change in favor of seniors. By the time you arrive to be a senior, the rules are so changed so much, whatever effort you make right now trying to save taxes to the future is wasted. It makes no sense. So don't even try to tell me, oh, I'm going to pay taxes right now, so in the future I'm going to pay less. Don't even talk like that. These are outdated financial planner would say that to you. If someone really understands human activities, understand the history of taxes, they will tell you that in tax, you only plan for the nearest year. You don't plan for long because you don't know what is going to happen. And if somebody come onto the White House and change everything in the Constitution, you don't even have tax anymore. You don't pay taxes. How about that? Right? So don't even rely on that and just do what you can do today. So in tax, I always tell folks that you don't have a long vision for taxes. You do it today. So if you put away benefit, so you save $50,000 taxes, someone come around and goes, no, pay it, because you can put that in another account, make money in the future so you don't have to pay so much taxes. That is a word I want to start with a B. I really want to say that, but there's a lot of people doing that. You don't want to be one of those. You want to listen to Ying and really think about the future, not in terms of tax rules. And you save your taxes today, not tomorrow. And you can plan other things for the future. Plan your kids' college. Plan everything you want. On taxes, you, me, and others, we're out of control. Okay, it's not under our wheel for whatever happens. You just need to learn what is happening right now and to do the best for right now. All right, Saving incentive match plan for employee is called a simple IRA. This is one of the saving plan, and I want to point that to you. It has a lot of content in here, but I want to go forward because I just have a few minutes left. Defined benefit plan, this is the one that I want you to know. And this is as an employer, as a small business owner, you can have the defined benefit plan. Let me tell you something. It is creditor protected. Means if you get into a lawsuit, your retirement funds, your defined benefit plans, those are under protection. If you owe someone's money, they sue you, they win, they come to get your house, whatever, but they can't get your retirement plan, get your pension. These are safe harbor for you. You are away from creditor collection. And tax credit for employees. So we're talking about employer, right? But for our people, when they make money from your business, they go home to do their taxes. If their AGI is below a certain threshold, they actually can get a credit. It's called a saver's credit. So I just want you to be aware of. I know you don't do your employees' tax return, but you can tell your employees that it is very possible you would entitle to the saver's credit, and that is also available to people who has a lower income but still saving. Saver's credit is pretty good. It is 50% of your contribution, and with the the maximum is 1,000, but they take 50% then compared to the maximum, so you could get a $1,000 tax credit. It is a non-refundable, so that means you don't get a check for 1,000. But if you are going to write a check to pay taxes for 1,000, this 1,000 will reverse yours. Does that make sense? So I hope that makes a general impression for you that, wow, retirement plan, pension plan, as a small business owner, there's something I need to look into more. I want to know more. So you can go to our YouTube channel, type into retirement, learn. I mean, to be a business owner, don't think that you only need to learn your area of business. Like if you are in marketing, you're only going to learn digital marketing and you don't want to learn finance. No. As a business owner, you learn everything related to your business contact. You will win this battle if you know more. But if you don't know these kind of information, you lose, right? Obviously, you don't feel like you're shedding any blood and you're not injured, but the injury is invisible because you just lost the time to contribute. The government don't allow you to catch up. Oh yeah, last 10 years you forgot? No problem, you can catch up. No, there's no such a thing, okay? You only have to do it now for this year, then do again for next year, because time is one of the big factor for saving for retirement. The earlier you begin, the better you will become. So I would recommend you to start for 2023 even. Don't worry about it is already gone. Remember that Secure Act allow you to do something. So just ask your tax preparer, ask your financial planner, ask them what can you do, and you want to set up 2023 plan. They will give you an idea. They study those Secured Act rules, right? So with that, I want to conclude our 30 minutes today by showing you again our brilliant partners at Community CPA. Each one of us has an area of specialty, and you can click us, book our time, and other than me and Dr. Hao, everybody has a free session, so you can really tap into what you want to learn from there, and you can become our client. And I'll tell you that becoming our client is not my call. Becoming our client or becoming Community CPA's client, it is your decision and commitment. And I want you to make good choice. If you have someone you know doing brilliant job, just make sure you stick with them, because this relationship is a lifelong relationship. It's not this year is this person, next year is that person. If you are that kind of person, change that behavior. You want to secure a long-time relationship with people who does your finance. All right. And our phone number is right here. We open 6 days a week. Haven't heard of that yet, right? Yes, we are the only CPA firm, so far I know, actually open 6 days a week from the day we started the company. So dated back to 1998. So we always had 2 shifts working in the firm. So nobody works 6 days a week, but we have 6 days open policies in all of our branches. Catherine at communitycpa.com, the person who really knows what to talk, and she decided on the topic I talk every day. And I hope to see you again. And we have plenty